All right, let's jump right in and take a deep dive into Equinox Gold. I'm going to break down their Q3 2024 performance, take a close look at that massive Greenstone mine up in Canada, and explore what lies ahead. The opportunities, the risks, the whole 9 yards. You ready?
Absolutely. Equinox Gold definitely had a lot to celebrate this past quarter, that's for sure. Record production, their highest revenue ever, adjusted EBITDA that, really blew past expectations. It seems like everything is coming up roses.
Yeah, I was looking at their press release, and Greg Smith, their CEO, was practically popping champagne. He said, and I quote, "This is a record quarter for Equinox Gold, reflecting the ongoing ramp-up at our Greenstone mine and strong gold prices." Sounds like Greenstone's the golden goose, right?
You could say that. It's pretty amazing when you think about the timing. Just a few months ago, they were cutting the ribbon at that grand opening ceremony. Now, boom, it's officially in commercial production. They've shifted gears from construction and testing to actually churning out gold on a commercial scale. It's a big deal.
That's a huge milestone for sure. But I'm curious, are they operating at full capacity yet?
Not quite. In Q3, Greenstone was processing, on average, about 14,300 tons of ore each day. So that's about, roughly 53% of its design capacity. It's like a car engine that's, just starting to warm up. By early November, though, that rate had already jumped to over 20,400 tons a day. They're picking up steam.
Okay, so they're definitely gaining momentum. But what about the shutdowns I read about? Anything to be concerned about there?
Yeah, there were those 3 multi-day shutdowns in Q3, but that's, pretty standard during this ramp-up phase. Think of it like fine-tuning a really complex machine. They need to make those little tweaks, address any hiccups, optimize the entire process. The encouraging part, the crushing and grinding circuits, those have already hit full capacity. We're talking 27,000 tons per day, and their daily gold recovery rates are hitting highs of, get this, over 90%.
Wow, over 90%. That's seriously impressive.
It is. It basically means they're squeezing more gold out of every ton of ore they process, and that's crucial for, profitability, right?
Makes sense. So is it all smooth sailing from here on out at Greenstone? Are they on target to hit those ambitious production goals?
Well, not so fast. They've had to make a couple of adjustments along the way. Equinox Gold actually tweaked their 2024 guidance twice this year, back in August, and then again in October.
Okay, so what's the story there? Did something go wrong?
Not necessarily wrong, but there have been a few bumps in the road, as you might expect with any operation this complex. The ramp up at Greenstone has been a bit slower than initially projected. There was a temporary shutdown over at their Castle Mountain mine, and they've run into some recovery challenges at a couple of their other sites.
So these adjustments to their guidance are basically them being realistic about those real-world challenges.
Exactly. It's all about transparency and managing expectations. But here's the key takeaway. Even with those adjustments, Greenstone is still on track to produce a pretty significant amount of gold this year. We're talking somewhere between 110,000 and 130,000 ounces. That's a big chunk of their overall production goal.
So they're being cautious, but Greenstone is still a heavy hitter in their portfolio. Now help me out here. If I'm an average investor trying to make sense of all this, what does it mean for me?
That's a great question. These guidance changes can sometimes make investors a bit jittery. But in this case, I think it's more about Equinox Gold being upfront and setting realistic expectations. They're still very bullish on Greenstone's potential, and the long-term outlook remains really positive. But you definitely want to keep a close eye on how those production numbers actually shape up over the next few quarters and how they tackle those operational hurdles we talked about.
Speaking of things that could affect their bottom line, I was reading about how exchange rates have actually been working in their favor. Is that right?
That's right. Fluctuations in those exchange rates, especially with the Brazilian real and the Mexican peso, have actually turned into a bit of a hidden advantage for Equinox Gold.
Okay, break this down for me. How does that work?
So a weaker Brazilian real and Mexican peso actually lead to lower operating costs for their mines in those countries. It's cheaper for them to produce gold there when those currencies are weaker compared to the US dollar.
So is this just a lucky break, or could this be a sign of something more, sustainable that could benefit them over the long haul?
It's tough to say for sure. Currency markets are notoriously volatile, and it's impossible to predict where they'll go next. While a weaker real and peso are definitely helping their bottom line right now, there's just no way to know if that trend will continue. You'd want to keep a close eye on those exchange rates and factor that uncertainty into your analysis. But even with all those positive signs we've been talking about, we can't just ignore the elephant in the room. And that's Equinox Gold's debt. We're talking nearly $1.5 billion.
Yikes. That's a hefty number. That has to come with some pretty serious interest payments, right?
Oh, yeah, definitely. It's in the ballpark of about $92 million every single year. So that's a significant cost that eats into their profits, especially when you consider they're in this period of rapid growth and expansion.
That makes sense. So how do they manage that? I mean, they're trying to ramp up this huge new mine at Greenstone, keep their other operations running smoothly, and now they've got this massive debt hanging over their heads.
Well, they've been pretty upfront about their game plan, actually. Debt reduction is their top priority. They've already started chipping away at it, and the cash flow coming from Greenstone, once it's really humming along, is going to be absolutely crucial for their deleveraging efforts.
Deleveraging. Can you, explain that in simpler terms?
Sure, think of it like paying down your credit card debt. Equinox Gold is trying to reduce the amount of money they owe so they can get out from under those big interest payments. The goal is to free up more cash so they can invest it back into the company and keep growing.
Got it. Sounds like a tricky balancing act. They've got to make those interest payments, invest in Greenstone, keep those other mines profitable, and somehow reduce their overall debt. That's a lot to juggle. Help me out here. If I'm an investor looking at Equinox Gold, what's the takeaway? What should I be thinking?
I'd say it's definitely a company with huge potential, but like you said, there's also a certain level of risk involved. The success of Greenstone is really going to be make or break for them. If they can hit those production targets we talked about, keep their costs in check, that mine is going to be a cash cow. And that cash can be used to pay down that debt.
But if Greenstone stumbles, or if, let's say, gold prices suddenly tank, things could get a little dicey, right?
Absolutely. You always have those external factors that are totally outside of their control. That's why it's important to look at the whole picture, their debt management strategy, how they're running their operations, and of course, the overall market conditions.
Let's go back to Greenstone for a minute. I know it's still in that ramp-up phase, but what kind of numbers did they actually put up in Q3?
All right, so in Q3, they produced 42,400 ounces of gold at Greenstone. That was with an average recovery rate of 79% and a cash cost of $930 per ounce.
Cash cost. Can you explain what that is exactly?
Sure. Cash cost is basically the direct cost of mining each ounce of gold. It includes things like labor costs, the cost of materials, energy, and processing the ore. But it doesn't include, things like corporate overhead or exploration expenses. So it gives you a pretty good idea of how efficiently they're actually extracting that gold.
So lower cash costs equals more profit, right?
Exactly. The lower, the better. And remember, those daily recovery rates, they're already above 90%, which is seriously impressive for a mine that's still in its early stages.
Okay, that makes sense. Now zoom out for me a little. What's the big picture, the long-term potential for Greenstone?
Well, once it hits full production, Greenstone is projected to be one of the largest and highest-grade open-pit gold mines in all of Canada. We're talking average annual production of 390,000 ounces of gold for the first 5 years.
Well, no, that's a lot of gold. What happens after those first 5 years?
The mine has an initial lifespan of 15 years. After those first 5, the average annual production is projected to be around 330,000 ounces.
So potentially, this one mine could turn Equinox Gold into a real powerhouse in the gold mining industry.
That's the goal, for sure. But, like we talked about earlier, that debt adds an element of uncertainty to their future. They need to execute their plan perfectly, both at Greenstone and their other mines, to really achieve their full potential.
It sounds like they're walking a tightrope. What would you say is the biggest opportunity and the biggest risk for Equinox Gold going forward?
Well, the biggest opportunity is, without a doubt, Greenstone. If they can get it to full production, hit those targets we talked about, and manage those ramp-up challenges, it's going to be a cash flow machine. And that cash can be used to pay down that debt and, fuel even more growth.
And the potential downsides, the red flags to watch out for, what are those?
I'd say the debt is a major concern, obviously. If they can't generate enough cash to service that debt, it could become a real anchor dragging them down. Another thing I'm keeping an eye on is their ability to control costs at their other mines. We've seen some ups and downs in recent quarters, and any unexpected cost increases could really squeeze their margins.
So they need to be laser focused on keeping those costs under control across all their operations. Anything else that could trip them up?
Well, one thing that's always a factor with mining companies is that, they're operating in different parts of the world, often in countries that, can be a bit unpredictable.
Right. I see what you're getting at.
Yeah.
So what do you mean by unpredictable?
It's all about managing those relationships with local communities and governments in the countries where they operate. Any kind of social or political instability can really throw a wrench in their plans, disrupt their operations, and ultimately impact their bottom line.
So it's not just about the gold. It's about navigating those complex social and political landscapes.
Exactly, and that's something investors should always keep in mind with mining companies, especially those that are operating in multiple countries. It's a layer of risk that you just can't ignore.
So it sounds like Equinox Gold's future really hinges on their ability to, well, to execute their plans flawlessly. Any missteps along the way could have some pretty significant consequences.
No doubt about it. It's a bit of a high-wire act, you could say. But the good news is they've got a strong management team in place, a world-class asset with Greenstone, and a clear strategy for tackling that mountain of debt.
All right, so let's wrap things up here. I want to leave our listeners with something to think about. Now that Greenstone is up and running, producing that precious gold, what would you say is the single biggest challenge facing Equinox Gold in the coming year?
That's a good question. I think the biggest challenge for them is going to be finding that sweet spot between aggressive growth and financial prudence. They need to manage this rapid expansion, keep a tight lid on those costs we talked about, and make some serious progress on paying down that debt. It's a tough balancing act.
And what about the flip side? The biggest opportunity?
Greenstone, without a doubt, it really has the potential to be a game changer for them. If they can optimize that mine, hit their production targets, the cash flow is going to be enormous. And that will give them the resources they need to achieve those long-term goals.
Well, that brings us to the end of our deep dive into the world of Equinox Gold. We covered a lot of ground today. We talked about their record-breaking performance, this massive new mine that's coming online, that elephant in the room, the debt, and of course, those exciting opportunities that lie ahead.
Yeah, it's a fascinating story to follow. Definitely a company to keep an eye on.
Thanks for joining us today, everyone. We hope you gained some valuable insights and a better understanding of this dynamic company, Equinox Gold. Until next time, keep digging for that knowledge.